welcome to Law Easy. My name is Marty Schenkman. I'm joined for this video clip by Leo Parmigiani, CPA, a partner in PKF O'Connor Davies. Thank you.
LLP.
In their New York City office. And Leo is going to help us talk about a topic that is really incredibly important. I would like to think everybody's aware of it, but it's far from the case, and lots of people have problems with it. Reporting foreign assets. So, I wish everyone knew about it, but I keep seeing nightmares that I've referred out to specialists to deal with. Why don't you give a little background on the FBAR reporting requirements, what people have to report, and then after you explain what they have to do, we'll talk about the dire nature of the penalties.
Sure.
Because if that doesn't convince them to report, the penalties will.
Sure. The FBAR goes back many, many years. People think it's a new phenomenon, but it really is not. The IRS really came down on this, I guess, in the mid-2000s, 2005, 2006. They came out with some voluntary disclosure that's going on for 10 years. They've shut some of it down. But basically, it's the reporting of foreign bank accounts, foreign financial accounts, and is now extended to foreign securities. So if you have not reported those to the Department of Treasury, the IRS, on the various filings, there can be significant filings.
The penalties. Let's just mention some of the forms. So there's an FBAR form. You mentioned there's an 8938 that should be included with the federal tax return.
That's right.
And you said for trust there's a 3520, 3520A. For CFCs, controlled for corporations, a 5471. Not meaning to rattle you with numbers, but there's a lot of different forms that you may have to file. You want to make sure you're getting done what you need to do. Now, is this stuff common enough that whoever goes to a tax preparer and accountant, they're likely to know what has to be done because a lot of it's automated? Or is it possible that some accountants may not be aware of this?
Well, I would say, again, 10 years ago or so, many practitioners were not aware of this at all.
Right.
I think the IRS has publicized it fairly well, and many practitioners are now aware of the requirement. Our engagement letters tell people they should report if there's any foreign bank accounts, any foreign assets. The complexity of the forms themselves are another story. A lot of preparers that do basically domestic work, they're not familiar with preparing these forms and the significance of every line that you fill out of these forms. So although they may be aware of that, they need international tax specialists to help them get through it sometimes.
So if you have significant foreign assets, you want to make sure your tax preparer, your accountant, has some expertise in this.
Yes. I mean, if you have investments in foreign companies, you can either have a small interest, and it can be considered a passive foreign investment company, a PFIC, or a controlled foreign corporation. If you have investments like that,
you have more acronyms than the estate planners.
We do. Well, I can get into beaten guilty, but we won't do that. That's another segment. But you really need to be aware of these forms and the risk of not complying.
Some of the things that seem to have to be listed sound pretty basic and obvious, like the name and address of the bank, the aggregate highest amount of the account on a cumulative basis for a year. What does that actually mean?
That just means you have to report the amount that's in the accounts at the highest balance at any time. That could come up at any point in someone's life. They could sell property overseas, have no balances in there, and then turn around, and at any moment there's $1 million in there, and then they move it out the next day. It was there at one point of time.
And that becomes the number to report.
That becomes the number to report.
So do you actually have to look at all the bank statements for the year to determine what that number is?
Well, we ask the question in what we call an organizer, information organizer.
Right.
We ask the question, so they really volunteer. We don't audit. If they say, please look at our accounts, their fees could go way through the roof, so they generally
But
provide
somebody has to then look at every statement to see what the highest figure is.
They do, yes.
Now, a couple of the categories of people that you said commonly miss this, and I think we're going to talk about other people that miss it because it's not as obvious. You mentioned green card holders and U.S. citizens living abroad. Maybe you could elaborate why they often miss these requirements?
Sure. The U.S. is one of the only countries in the world that requires you to file a tax return whether or not you live here. So if you're born...
It's a sign of love.
It's a sign of love. I mean, to be American is a gift, I guess. But it's a gift that keeps giving, because if you were born American, let's say you were just born in the United States and you departed, your family was here for a short period of time, and you grew up in a country like, say, France, and you never really came back to the U.S., don't even have a U.S. passport, you're still an American for tax purposes.
So you still have to file these reports?
You still have to file every report, a Form 1040,
right.
and the 5471s, the FBARs, and the like.
You said another common area that's missed is where a U.S. citizen gets an inheritance that may include a foreign asset, and they just don't realize that they now have to start reporting it.
Right. Many Americans are first generation. Their family is still in the country of origin, and they'll inherit certain assets when their family dies, or it could be real estate. The real estate gets sold. It has to sit in an account, and you're going to be the owner of that account because you're the heir to the estate of your parents.
Now, it gets more complicated, and I think it's important to talk about so people realize how broad this is. One of the things that you mentioned is you have to report accounts that you have a direct interest in. That's kind of obvious. I have a bank account.
Right.
But also an indirect interest. Maybe you could explain what that is, because I think that may be another area that's rife for people to overlook what they might have to file.
Well, if you read the rules, and I just had a case involving this recently, anyone who's acting as your agent of your money could be considered somebody who is who is the actual owner is the direct owner of the account, but you have an indirect interest because it's your money. The best example is usually like someone who's your nominee that has legal title to the assets, but
Like a broker.
Like a broker, right? So if you have someone like that, that's still your account. And also, as you may know, if you have signature authority over those accounts, it's not even your money. You do not have any financial interest in it at all. You still have to file these FBARs.
So one of the examples that we spoke about with that was if you're a officer of a corporation and you have signature authority over a foreign bank account for that corporation, you don't own it. It's not your money.
Right.
But because you have signature authority, you also have to report.
Yes, you need to be very careful.
So this is not that intuitive. So if you have involvements overseas, it's probably worth talking to somebody familiar with the rules to make sure you're not running afoul of it.
Right.
Now, just to make sure people take this as serious as they need to, you mentioned the penalties are rather meaningful.
Draconian is a better word.
Okay.
I mean, some of the willful penalties could be as much as 50% of the account balance per year.
Right, which, let me use the example you gave me because it's startling. So in theory, it's possible that if you have an account and you didn't report for 5 years, 50% of the account balance for 5 years, you could owe 250% of the value of the account.
That's possible, yes.
That's serious.
That's if it's willful, yes, it definitely.
So
would be.
that's almost as bad as the firstborn child, right?
Right, well, right, depending on what the cost of college will be down the future. But I mean, it could be a minimum of $10,000.
So
And
it's
there-
significant.
And there are procedures that we can apply for. We generally call them streamlined procedures.
That's
And
when
it-
it's non-willful.
That's when it's non-full, and there's a possibility that we can file this with the IRS and mitigate the penalties, in some cases bring the penalties down to zero. So it's worth exploring.
And just to kind of wrap up, if it's willful, you were playing games and you shouldn't have,
Right.
and you have to disclose, the comment you made is what you really should do is call a tax litigation attorney.
Yes.
Because you want to have the attorney-client privilege when you start looking at this.
Yeah, soon, we interview our clients rigorously in the beginning, and when we get any sense at all that it might be somewhat willful, we say seek an attorney, and we can work under the
Under the
auspices.
attorney.
Under the attorney, on a Covell letter, yes.
Coval. For those not familiar, let's just define it. A Coval letter is where the attorney who has attorney-client privilege hires the accountant and even other advisors to advise the attorney in representing the client on these issues so that you're covered by the attorney-client privilege.
That's correct.
I mean, I think the wrap-up to this is if you have foreign accounts, make sure you report them, and if you're not sure, ask somebody because the rules are not intuitive and the penalties are really burdensome, and you want to make sure you address it properly. Anything else you want to add to that?
I would add foreign trust also. If you have any money coming in from overseas, someone has established a trust in a non-U.S. jurisdiction, I would definitely seek U.S. tax counsel. There are other
So
damaging
I want to
penalties.
thank Leo for joining me on this video clip on foreign reporting, which is a critically important issue. Please bear in mind that the video clips are for educational purposes only. Do not take any steps without getting appropriate professional advice or doing your own research if you're a professional advisor. Thank you. Thank you, Leo.
Okay.